Hello everyone, and we're excited to bring you a brand new season of Front Row here on Economy.lk. Today I have with me in conversation Alejandro Alvarez de la Campa, who is the new country manager for Sri Lanka and Maldives for IFC. Pleasure to have you, Alejandro, here in Sri Lanka, and this is your first interview as well.
Thank you very much for the welcoming, and yes, it's my first interview, and I've just been in this job for a few days.
Even though you're new to Sri Lanka in terms of your new role, you've been here, you know the lay of the land given your past role here as well. But what in your view right now is the assessment of IFC in terms of Sri Lanka's economy and its outlook as well?
Yes, thank you. So Sri Lanka has gone through one of the worst macroeconomic crises in its history. And obviously the situation is very difficult and very complex at the macroeconomic level. The prospects for growth right now are that Sri Lanka will start growing again at 1% in 2024. However, this growth is obviously subject to a number of reforms and structural reforms that need to be done. Some of these reforms are being discussed at the moment with the IMF and the extended fund facility that the IMF is offering. And the government of Sri Lanka has already started some of these important reforms. But it is imperative that these reforms start and that have a good pace of implementation. And some of the most important ones are obviously the consolidation, the fiscal consolidation that's needed with increase in tax revenues. Also restoring foreign reserves due to the dire need of having FX for the country. Cost-based recovery prices and establishment of recovery prices for certain goods like electricity and fuel. And then a market-driven exchange rate also to reestablish to have the currency go to the levels that it was before. So these are some of the measures that I think will be critical to start implementing. And again, the government is in the right path of implementing those, but they will need to be implemented in order to reach that growth level again.
And I think I've seen the last decade or so has been a key investor, and in particular towards private sector investments in financial institutions, in mobility providers. IFC has also been a keen promoter of increasing the women labor force participation and work around that as well. As an investor who is also part of a development group as well, what reforms do you think should Sri Lanka really embark on to catalyze more FDI, which we've lacked in the last decade?
Yes, so IFC has invested since COVID around $830 million in Sri Lanka. And we have been counter-cyclical in our investments, helping the economy recovery from COVID. And I believe we have a very strong role to play now also with the economic crisis, because for us, the economic crisis will need to have a strong private sector. And unless the private sector steps in and starts bringing FDI and starts creating employment and bringing investments, the country will not recover as fast as we are expecting. In order for the private sector to be stronger, to be more present in different sectors of the economy, we believe that there are a few key reforms that are important. The first one would be around the state ownership of companies. And I think in that sense, the government is already looking into how they can create a structure for state-owned companies that is more efficient, that has more corporate governance principles around it, and that can have more private sector participation in those state-owned companies. The second area that I would say it's important is financial sector reform. And there, obviously, the central bank will play an important role with the new banking law. But there are areas like establishing financing mechanisms in local currency, for example, which are very important, digital financing, and the whole fintech regulations, which I think would help create new avenues for obtaining credit. And also areas around secondary markets for NPLs, which is going to be an issue that banks are going to have to deal with in the next few years. So those are quite important for the financial sector to continue supporting the real sector. Another important area of reform that I see for the private sector is trade, because Sri Lanka still has a quite heavy trade regime with average rates, customs duties for imports, which are around 22%. And a lot of those come from para-tariffs, which in our view could be progressively reduced. Obviously, they need to pace that reform because of the need of have fiscal revenues, but we believe that progressively those could be reduced. The final area where I would say the government can think of reforms is the public-private partnerships, because we believe that a lot of the infrastructure needs that Sri Lanka has will not be able to be done by the government given the fiscal constraints, and will need a strong private sector participation, for example, in energy, in infrastructures, in water, in health, and other sectors.
And just moving on the reform conversation, and I think for us here with the external debt crisis that we're having, the IMF program negotiating, all of those might seem new arenas for us, but I think it has been done before. A lot of countries have defaulted, gone through it, they've managed to reset. What can Sri Lanka really learn from those journeys? Because we don't have to rewrite the script. There might be things that other countries have done well, which we can learn from. Of course, we can't really copy something and paste it here, because the situation, the frameworks are quite different. But what, in your view, given your experience within IFC as well, that Sri Lanka can learn from these other countries?
Yeah, absolutely, Shiran. So you're absolutely right. There have been a lot of crises before in different countries, and I think there are always good lessons from those crises, and some of them can be applied to Sri Lanka as well. If we look at some of the crises that have happened in this region, or in the East Asia Pacific, South Asia region, we could think about some examples of countries that have gone through those crises. India, for example, in 1991-92, with the balance of payments crisis. Indonesia, Thailand, they have gone through crisis as well. And there are a few common elements there which I think could be useful for Sri Lanka to think about. The first one is trade deregulation or trade liberalization. I think we have seen that in a few countries, despite the crisis and the need to increase fiscal revenues, a lot of countries have gone into reducing tariffs, especially para-tariffs, which are not duties, but more like fees and charges that customs establish. And I think that's something that could be done here progressively. Thailand, for example, did that. India did that very aggressively in the 1990s, reducing from about 27% to 5% in a period of around 15 years. And that had a very, very important impact on attracting more investments and trade into the country. Another area is also the deregulation of the investment regime, and also at the industry level. So, and what I mean by this is to have an investment code, for example, which is attractive for investors, which doesn't put restrictions or limitations on investing in Sri Lanka, and also that opens up markets for, or in other words, there's contestability in markets where different investors can go into certain markets which may be monopolized by companies. Another important reform that we have seen in those countries that have gone through crisis is in the financial sector, where countries have created resolution frameworks for potential financial crises. They have also looked at public-owned banks and tried to make them either include participation from the private sector in those banks. And then one important reform that has happened also in those countries in crisis has been in the infrastructure space, because despite the fact that countries have a limited fiscal space, a lot of countries have gone into introducing public-private partnerships, establishing a PPP unit, creating a viable pipeline of investment projects that can be used to bring in private sector into that infrastructure. And so I think those are three important lessons that would be useful. One final comment on this is that we have also seen that countries that have only implemented macroeconomic reforms or those limited to what the IMF was asking, but have left out these other important reforms that are more targeted towards private sector, like PPPs, SOEs, etc., trade, they have had subsequent crises. In other words, they haven't really managed to introduce all the structural reforms that were needed, and that a few years later has led to crisis. So Argentina is one case, Egypt, Tunisia, Pakistan, for example. These are countries that did not implement all the reforms needed, only certain reforms related to the macroeconomic environment, and then they saw crisis in successive years. So I think it's a very important point to make sure that not only the macroeconomic reforms are introduced, but also the ones that would favor private sector participation.
Sure. Thank you, Alejandro. I think that's one of the reasons why we are going for our 17th IMF program, because we've not done a lot of the other reforms to complement the macro reforms that usually come with an IMF program. Thank you for tuning in and watching this episode on Front Row. Please stay tuned for future episodes like this, where we bring in guests, experts to explain some of the key economic and reform-related issues in a simplified manner for you. Thank you, Alejandro, for being here.
Thank you very much for having me, Shiran.